All right, let's get this thing going. Hey guys, welcome to today's video. We are going to be doing basically a roast of my trading today. So I wrote down a few things that I did wrong today. And this is always a great opportunity, I think, and lesson for you guys to learn from my mistakes. I'm usually pretty good at not making these mistakes, but I don't know what it was about yesterday. I don't know if it was it's just kind of going in and having a specific plan or lack thereof and thinking that I could just out trade it. And also looking at a lot of different strategies. So lately I've been working really hard and studying a lot. And I think over testing, over trying different strategies has been a big part of this. So today I got beat down really good on the ES. Most of that happened last night. We'll take a look at the chart and we'll go through this. So talking about and kind of jump into this here, we'll jump over to Thinkorswim. You know, today really wasn't, for starters, it was not a very big range day, right? I would say, I mean, yeah, this candle counts, as part of the range. I mean, because we did break out. But we had a 48-point range, but really, I mean, if you don't count that, if we go off of, yeah, I mean, pretty much right here was the range, 58 down to, right in here, 35. So, I would say we had about a 35 point range, roughly, give or take, if we go off the bodies of the candles. You could say 35, 36 point range today during regular trading hours. Now, during, Globex, I mean, we had a range of approximately, it wasn't really range bound, it was about 81 points to the downside. It was actually even more to the downside. I mean, in total, we had a move from peak to trough of 95 points. So where did I go wrong? The question is, okay, Cameron, so what happened? Where did you go wrong? And my big thing was, we opened up, and in fact, if you zoom in up here on this candle, you'll see we opened up here at 61.12 or 46.12, pardon me, and had that 9.5 point pop. And I thought, okay, well, we pulled back. I thought, well, here's a support. But usually, we've sold off quite a bit these past few days, right? Prefacing all this, we sold off on Friday, we sold off on Thursday. I mean, we're down just from Thursday alone. I mean, Thursday going into the close, I mean, we were down approximately 125 points. I mean, at one point we were down even further, 125 plus, that's like 150 points, right? Down in a 2-day span. So I thought, Mondays are usually bullish. It's a Santa Claus rally. Again, I was anticipating, and that's definitely a big problem. Let's remove these. Definitely a big problem. It's a problem when you're anticipating something, because how can you anticipate an 80 some or 90 some point move to the downside? You can't. So basically what happened to me was, I ended up going long. I got stopped out. We started to rally. I think I got in long again. We rally a little bit. Stop loss was longer, got stopped out. And by this point, I'm like, I've taken already a couple hits. And at this point, I'm just like, all right, we're finding some consolidation. We're finally down here on the buy zone, right? And I'm like, okay. And I've been using at this point Fibonacci retracements, right? So if we take some fibs here, I'm like, okay, that's the range, and the fibs just never really matched up, right? So I'm like, okay, we're getting close to the Fibonacci retracements here. We'll get a break up. We're getting some consolidation. We'll get a break above, and it just didn't. It failed again. We failed again and again and again, and Fibonacci retracements weren't working. So first mistake that I really made here was the fact that I was not willing to switch, right? Anytime you're trading, you got to be willing to either reverse or stop trading if you're going to keep hitting it short, or sorry, going long, and the trend now is short. It's very easy, I think, when you're in the position, and I've known this for a long time, and it plagues everybody. It plagues me. I'm sure it plagues you. That's kind of why KPLs were developed as a long above, short below method. Now, you can trade it just as a, inside a range, right? They're meant to be excursion points, basically. And then, you can trade during the Globex session. You can go long or short. I usually like to try to stay in between our sell zone KPL and our buy zone KPL, right? But my problem was I had lost those three or I think it was like 3 times in a row, and at that point I was just like, okay, it's got to reverse. We've sold off so much. And I managed risk fairly well at this point. Like I said, I wasn't taking on stupid size. I think I ended up somewhere down. I traded anywhere between 4 and 5 contracts, and so most of the time it was 4. But again, I revenge traded a little bit, would throw a 5th contract on there, being like, okay, this is where we're going to get the pop, right? And if we look at, oh gosh, if we look here at the chart, I think I started again revenge trading in the sense I'm like, okay, we're gonna go, we're gonna rip, we're gonna go. I think I was long somewhere right in here. And I was like, okay, we're up, I'm up 12. I think I finally took 1 contract off. We got this nice long candle that was, 8 points or whatever this that candle was. And then we got rejected, and then we trended down, and you start to get desperate. I just was getting desperate. And finally I get KPLs drawn. We're here at the KPL, and I'm like, F this, like this is going to be support. 45.63 is going to be support, right? Well, we trend then, right? We trend from here for several hours. We trend. I think I ended up going to bed, and I just thought, okay, I'm going to hold this long overnight. I'm going to wake up and we're going to be up, up in this range, right? And I'll pulled in, however many, I don't know, what is that, 40 points or whatever. And I'll be, sitting pretty well. Obviously we broke below, and I wasn't trading this. I ended up not trading this. You continue to see large red candles followed by just smaller greens. Now, granted, over here, you saw some big greens, big green, decently sized green, but you're still seeing big red, little green, little green, little green, little red, red. And the trend was, and it's hard to notice this in the moment, what the trend really is. Where are we going, right? So I think there's a couple things, right? I took approximately, these numbers aren't exact, but I think I took somewhere right around a 40-point stop loss. Ow, I don't just bit my lip. Took about, somewhere right around that 40-point stop. Now, what is my normal stop? My normal stop on any given day is somewhere between 19 and 22 points. So there's the first mistake. Now, granted, like I said, size wise, I wasn't trading any exorbitant amount of size or anything like that. But I was upping my size after a stop loss. So that's one of the cardinal sins, right? So you have a stop loss and you think, okay, well, the next trade is going to be better. I'm going to add a contract to it. And that's first thing you shouldn't be doing, right? But I think max stops, I had that max stop loss. I had those rules in place, and here I continued to trade through it. Now, I did stop, actually, so I was awake. When that trend broke through the KPL. I remember that now. I stopped trading. I stopped trading at the end of the night, right? And I was just like, all right, come hell or high water, I'm going to regret this by not trading it. So I thought I had, at some point I thought, okay, you've hit your max, your max limit, wake up, start trying to long again. And I'm just fighting the trend. And, so I think I just kept trading with a bias. I think that was another big mistake. So, talking about mistakes, the trend is your friend. The trend is your friend. And if you're not trading with the trend, it's going to hurt you. And it's hard to sometimes see that. And that's why I think KPLs really do so well. KPLs are very unbiased, right? You're long above, short below, long above, short below. And if you have a max set stop, you know, if you take those stop losses, you're going to stop and then you have to wait for the next level or whatever, you know, whatever your next rule is or reason. The other thing too is I think using Fibonacci retracements, they weren't exactly lining up. The fib extensions and the fib retracements just weren't, I wasn't finding consistency, but I was like, these worked so well the previous days, it's gonna work. And so the second thing, I'm actually going to get to that at the very end, but I think not trusting my strategy and not anticipating a move was a kind of a problem. I was anticipating a move too much, and I just kept revenge trading. When you try to anticipate, and this is, I mean, this is a great example here when we pull up on the chart. I mean, I was trying to anticipate a move. I was anticipating the bounce, right? But going against the trend every time. So massive red, massive red, massive red, green, right? And this is a classic rookie mistake. You just believe that the reversal is going to be as strong as the sell move. So you want to be the contrarian, right? That this will rally, you know, the 20, you're anticipating this is the bottom. This somehow, wherever you're getting in, that is the bottom. And the problem with that is usually on large moves as well. And this was not a small move. I mean, this was a 30-point move. It's very difficult to anticipate the end of the move. So what you really need to be doing, and I need to go back and work on this, is not anticipating the move. You want to be shorting the pops and selling the drops. And that's going with the trend. Which direction, which type of candle, red or green, is getting the most looks? I mean, this is very difficult to trade. And it's why I didn't end up trading most of this, was because, I mean, this is a 20-point range at the beginning of the day. And we're just seeing massive greens and massive reds, massive green rallies, and then reds. Green, you know, these are these kinds of moves right here. You know, we're talking 11, 12, 20-point moves. These are sure to screw you. This is like, just screw me, please, please screw me type candles, because you cannot set a stop that's going to avoid an 18-point gapper. You just can't, right? And so these can be very difficult unless you're scalping. But again, that's not my main objective. That's not my main goal. And so this would just eat me alive. And so long story short, you know, you get here down towards the bottom, and the price action just was not, I mean, was just not good. It just was not good. I mean, it was very difficult. You know, I mean, you could start to see a trend here though, you know, and getting over here, obviously towards the very end of the day, we find support off of VWAP, and then you get the nice rally. You know, you get a decent rally here at the very end of day, but none of this was great. And I think, you know, revenge trading then puts you in this whole entire mindset that does not allow you to trade well. So overall on the day, this was not a great setup. I was not trading. This is a setup that I would not normally trade, right? I mean, I would have had a short, unfortunately, if I had been trading this right, I guess I would have had a short. You know, technically, if it was an algo running, that's an 8.5-point stop out or whatever, an 8-point stop. So I go stop, I could take the reverse, you know, and if I was trading the opposite side, right? 8-point stop, that down 16 points on 2 of those trades. But then I would have been, you know, I guess short somewhere in here. And then we would have obviously I would have had the opportunity or ability to have made a solid, you know, anywhere between, you know, 39 and I'd say anywhere between 39 and 30 points, as maybe 20. You know, I'm sure I would have taken some off down here at 20 on the drop, and then held that next a little bit more. Probably would have started to get a little nervous up in here. And probably would have started to, you know, to obviously get out somewhere in this range. But again, 20, let's just say, you know, I took 20 points overall, 20 points per contract. It would offset those unfortunate losses if I took one stop loss, and if I took 2 stop losses, and been fine on the day. Instead, I ended the day, you know, down, you know, close to 40 points or so, 30 some points. And that was just, again, revenge trading. The very last thing that I kind of wanted to go into with you guys about today was just not following a plan that has alpha or edge. Like I said, I traded a lot of different, not a lot of different, I tried to use Fibonacci retracements. They weren't working. Now that usually is a factor in creating KPLs, but I was trading a different strategy than what I found works for me, right? So this is probably the most important point. When you find something that works, you always need to be developing new skills. You always need to be looking at new things, always learning, always trying to improve your edge. But there can come a point where you think that you find something that's better and you jump into it too quickly, or you're like, oh, I'm just going to do what I've been doing that works and do this. And we, again, sometimes jump into that new thing too quickly. And so I think for me, you know, the beauty, again, my personal problem is I like to anticipate the move too much. That is my number one mistake. How did I learn to combat that? Well, knowing myself, having my trade journal here, if you can't really see that. But as you can see from it, or what I can see in it, is knowing that that's my flaw. How did I combat it? Well, I guess knowing that, I knew that I needed a strategy that allowed me to not have the bias to, again, I'm going to go long above, short below. I'm going to have these set rules in place so that I don't try to anticipate the move, right? And so that is what I'm going to work on a little bit more, getting back to the plan that has alpha, that has edge, that will keep me consistently profitable. And this is a great example today where, unfortunately, you know, or, you know, here's the other thing, you know, I could have potentially ended the day with, you know, I guess -8 points. That could have been my loss, you know, for today. So my max loss, if I would have followed the trading plan, you know, could have been -8 points. And that could have been the max drawdown if I followed the strategy. The max potential would have been, you know, somewhere right in that 39 point range. Just closing out the short if I did flip. And so those are kind of like the options. But again, because I continually traded poorly, ended up taking that larger loss. So I hope those things help. I hope those are helpful. And, you know, going on from to tomorrow, you know, what are some of the things that I did well? Well, I sized down. I wasn't trading, you know, my normal size. I mean, it's close to my regular size. But I would say, you know, I wasn't trading exorbitant size. I did, you know, add a contract here and there, revenge trading, but I didn't go stupid big. I did follow a max loss in the evening. You know, that's about all that I did well. I mean, I didn't trade horribly. It could have went much worse, but it wasn't what I normally do. So that's what I just want to leave you guys with. I hope that was helpful. I hope getting that insight into some of the things that I did wrong gives you guys an understanding that, you know, no one is perfect, and you're going to have a little bit of a tear down sometime to build up. And so hopefully it's helpful, and I will catch you guys in the next video. Feliz Navidad, Merry Christmas. I'm sure I'll talk to you guys before then, but it's December 20th. Christmas is coming, my friends. I'll talk to you guys soon. Bye.